Good day, class. Welcome to the fourth session. In this session, we will look at how to design and present business, financial, and marketing plans based on a budget for a new venture. A business venture is a new business that is formed within the plan. An exception of financial gain, capital, or finance is required for the establishment of the venture. And at times, there are multiple investors supporting the business with hopes of it being profitable. A business venture is born from the requirement of a product or service in the current market. Once the need is identified, the business venture is started by someone with the resources and time to develop and market the new commodity on the open market. A business venture is normally funded by an investor, which could be the owner of the business or the originator of the idea. In some cases, other investors may provide support and venture capital to fund the development and increase awareness of the business in order to share higher profit with the other investors. A formal business plan is necessary in order to outline the purpose and mission of the business in the future, which may include a measurable process of identifying additional business, increasing profitability, and an escape plan as a failsafe. In some cases, a business may choose to become public after a certain period of growth, which will allow additional business venture investors in the form of public stockholders to become involved in the success of the company. If a business chooses to remain private, it retains control over decisions that impact the daily operations and direction of the business venture. When working on a business plan, there are fundamental questions one has to bear in mind, which include why you decided on the product or service, the basis for the volumes, how to achieve the planned volumes, how much cash will flow in and out of the venture, if additional cash is required, if so, how much, and lastly, the plan of action if the set plans do not work out. A business plan gives you a structure for writing out what you want to achieve in a systematic manner. The first step before starting a new venture is defining your vision, mission, and goals. During this step, you will be assessing the innovation content in the product or service you wish to render and why you chose it. Your next step includes conducting market research and competition analysis to determine the demand of your product or service mix and analyzing the strategies adopted by your competitors, which will guide you in developing your business model. A business model will help you determine the 4 P's of marketing, which are product, promotion, price, and place. This helps you with your marketing plan, revenue costs, sales manpower plan, and the promotion plan needed to achieve the revenue forecast. A business plan follows a typical structure for the ease of understanding. The business plan structure includes the manpower plan, which defines your management team and the support staff that you will need in the future, and also defines what assets you will invest in to start off and formulate a capital expenditure plan. You will now be prepared to place the administrative and general expenses and prepare a 3-year financial projection for profit and loss statements, balance sheets, and the cash flow statements. The main 4 reasons why we write a business plan is to give information about your intentions to others, to try get third-party assistance with resources, to help you with strategic thinking, and to set financial targets. When creating your business plan, you should ensure to keep it concise, be realistic, show a path to profitability, and show a strong management team. It is very helpful to choose the structure of your business before you start the business and ensure that you are able to comply with the legal requirements it carries. Let us look at the 6 basic structures you can choose from. The first one is a sole trader, which is the simplest form of a business structure. It is relatively easy and inexpensive to start and maintain. It is run by the owner of the business, who is entitled to keep all the profits after deductions, but is liable for all losses. The second business structure is a partnership, which involves two or more people going into business together. The third structure is a company, which is a separate legal entity that is capable of holding assets in its own name. Shareholders own the company and directors run it. The fourth structure is a trust, which is not a legal entity. It is normally used in connection with running businesses for the benefit of others. The fifth structure is a cooperative, which is a member-owned business with a minimum of 5 shareholders who have equal voting rights despite their level of investment or involvement. The last structure is an incorporate association, which offers an alternative for forming a company for small non-profit groups like charities, hobbyists, as well as sporting, cultural, and recreational organizations. Each organizational structure has its own advantages and disadvantages, which need to be considered before deciding on the structure. You could be assisted by your accountant or business advisor on making the decision right, though you have to bear certain factors in mind, such as taxation requirements and liabilities, legal liability, costs, capital, and management requirements. You should ensure that your structure accommodates potential change with minimal disruption, provides enough asset protection, and effective distribution of profits. You need a marketing campaign and strategy to get your products and services in the marketplace once you have determined your target market. Your marketing plan is a statement that is supported by relevant financial data, explaining how you will develop your business. The plan should be based on action instead of historical data. A marketing plan answers a few questions, which include what you are going to sell, to whom you will sell, when and how you will sell, how much gross profit will the sales produce, what will the marketing cost be, and lastly, the return on investment. The easiest way to assemble the data is on a spreadsheet, which can be edited during the plan process and can be adjusted later on when the trading year has started. The spreadsheet can be used as the basis of your sales and marketing forecasts, as well as a reporting tool. You are required to state your financial requirements in the business plan, which needs you to consider alternative sources of capital if necessary. Venture capital is a great source of financing for many small business startups, but may have strings attached to it that may not be in the interest of the business owner. It is important to understand the requirements and the terms of a venture capital before committing to anything. A number of entrepreneurs are not willing to sacrifice a portion of control over their business, whereas venture capital firms generally insist on taking a portion of control. There are a number of tasks that one needs to accomplish when starting a business, such as finding the right location, acquiring permits and license to set up an accounting system, including appropriate income fields and a business expense ledger. Keeping track of business expenses can be one of the most difficult parts of running a business. A business plan will help you minimize the difficulties since you would have already set up an accounting system. The content of a business plan should clearly describe where the business is headed and should be made up of an executive summary, the history of the company, a clear statement of the business concept, a marketing and competitive analysis, an implementation plan, an assessment of resource, and lastly, growth and exit strategies. Every entrepreneur at some point has to present their business plan to a third party when seeking venture capital or bank loans. There is a difference between business plan that you will write for yourself and one that you will write to approach potential funders, but for both, you need to keep it concise. You need to identify what makes your business unique, keep it honest, and lastly, hope for the best and plan for the worst. You should ensure to spend sufficient time planning and bear the tips in mind to help you write a convincing business plan. We have come to an end of our unit standard. Please ensure that you go through your learner guide to cover topics we might have missed. I hope you understood everything that we have covered.